Mortgage-backed securities, MBS. Mortgage-backed securities, MBS. MBS are backed by home loans and provide income. MBS are backed by home loans and provide income. Investors purchase MBS for stable returns. Investors purchase MBS for stable returns. MBS are traded on the secondary market. MBS are traded on the secondary market. Net present value, NPV. Net present value, NPV. NPV helps assess the profitability of an investment. NPV helps assess the profitability of an investment. Positive NPV indicates a worthwhile project. Positive NPV indicates a worthwhile project. Investors rely on NPV for decision-making. Investors rely on NPV for decision-making. Over-the-counter, OTC. Over-the-counter, OTC. OTC markets deal with securities not listed on exchanges. OTC markets deal with securities not listed on exchanges. Many small companies use OTC for stock trading. Many small companies use OTC for stock trading. OTC trading can have higher risk compared to exchanges. OTC trading can have higher risk compared to exchanges. Price-to-earnings ratio, P/E ratio. Price-to-earnings ratio, P/E ratio. The P/E ratio helps evaluate if a stock is undervalued. The P/E ratio helps evaluate if a stock is undervalued. A high P/E ratio may indicate overvaluation. A high P/E ratio may indicate overvaluation. Investors use the P/E ratio to compare companies. Investors use the P/E ratio to compare companies. Return on assets, ROA. Return on assets, ROA. ROA shows how efficiently assets generate profit. ROA shows how efficiently assets generate profit. A higher ROA indicates better asset management. A higher ROA indicates better asset management. Companies aim to improve their ROA for higher profitability. Companies aim to improve their ROA for higher profitability. Return on capital employed, ROCE. Return on capital employed, ROCE. ROCE measures the return generated from capital investments. ROCE measures the return generated from capital investments. A higher ROCE suggests efficient use of capital. A higher ROCE suggests efficient use of capital. Companies monitor ROCE to assess profitability. Companies monitor ROCE to assess profitability. Return on equity, ROE. Return on equity, ROE. ROE measures the return on shareholders' equity. ROE measures the return on shareholders' equity. A higher ROE indicates better profitability. A higher ROE indicates better profitability. Investors watch ROE to assess company performance. Investors watch ROE to assess company performance. Return on equity, ROE. Return on equity, ROE. ROE reveals how much profit a company makes with shareholders' funds. ROE reveals how much profit a company makes with shareholders' funds. A consistent ROE can attract investors. A consistent ROE can attract investors. Companies focus on improving their ROE. Companies focus on improving their ROE. Return on investment, ROI. Return on investment, ROI. ROI measures the profit from an investment. ROI measures the profit from an investment. A higher ROI indicates a more profitable investment. A higher ROI indicates a more profitable investment. Companies calculate ROI before making major decisions. Companies calculate ROI before making major decisions. Return on sales, ROS. Return on sales, ROS. ROS calculates how much profit a company makes from sales. ROS calculates how much profit a company makes from sales. A higher ROS reflects better sales performance. A higher ROS reflects better sales performance. Companies aim to improve their ROS over time. Companies aim to improve their ROS over time.